record this session. All right, so today we are going to learn about candlestick anatomy and camouflage. These are two different topics, but I want them to, I'm going to link them into one because they share some features.
Okay.
So candlestick anatomy and the camouflage. Now, before I teach you about this, there is one certain subtopic that we have to, that I have to teach you so that you may understand these two topics of camouflage and candlestick anatomy. So,
okay.
So we learned in the previous topic, we learned about failed liquidity engineering, where the liquidity engineering that has failed to respect the supposed movement is where we will take the entry as flip. Now, the only problem now we face in this failed liquidity engineering is where are we going to place the stop loss? That's the question number one. Where are we going to place the stop losses? And question number two, sometimes this liquidity flip, they fail also to respect. I mean, we can find a liquidity flip like this. You are planning to enter here, but you find out now the price also smash it. Now you're wondering, why is this liquidity flip wasn't respected? Now, these questions that we ask ourselves, for example, in the issue of stop loss, if you enter in this point here, where are you going to place the stop loss? Are you going to place in this low here? Obviously, from here to here, there will be a lot of risk. Now, we cannot risk that. And I've told you the only amount that we have to risk is 15 pips only. Now, sometimes you can find out from this point here to here, there is a lot of pips. Now, these questions that we ask ourselves, we are going to answer them in the issue of candlestick anatomy and camouflage. I'm sorry, there is a car here passing, a lot of noise.
Okay, what is it? Yeah. No problem.
All right. So this question that we ask ourselves, we are going to answer them in these two topics. Now, before teaching you these topics, there is one important thing that I want you to understand. The issue of flip zone. The issue we call flip zone. Now, in order to know that this failed liquidity engineering is the strong failed liquidity engineering, is the strong flip, you have to know the flip zone. Now, we already know that in the flip zone, we talk, when we talk about flip zone, or when you talk about zones in general, we're talking about number one, resistance. Some people call it resistance, and some people call it demand. Demand zone. So supply and demand, these are the zones that we are widely known. And then we have a second zone, which is support, or some people call it supply. Easy. So these zones are what we are going to use them to know whether this failed liquidity engineering is the strong flip for us to take entries there. That's number one. In order to know this failed liquidity engineering is the strong place for us to place our entries, first you have to answer the question that is that failed liquidity engineering or that flip, is it in the strong zone? That's the question you have to ask yourself. Is it in the strong zone? If it is, then you have to ask yourself the second question. You have to ask the second question. Before that, we have features of a strong zone. When we say a flip zone, what do we mean? The zone that has several features, and those features can be so those there are features of a strong zone. A strong zone must have multiple touches. When we call multiple touches, meaning what happened then? Yeah. So when we say a strong zone, the first principle, that zone must have multiple touches. For example, when we call it a resistance zone, meaning that zone must have multiple touches from 2 touches to and above. So if you have a zone that has multiple touches, that is the number one reason to call it a strong zone. Or it can be a support zone like this. We have 1 touch and second, and it can be 3 touch, but must be from 2 touches to so this is what we call multiple touches. Now, the second principle is that zone, in order to be a strong zone for us to press entries, it must contain liquidity engineering flip. In any zone like this, you can see multiple touches like this, but inside this zone, there is a failed liquidity engineering. You cannot see, that's why I wrote here, it may not be seen in a constant time frame. For example, if you are in the 4-hour and you see a zone like this, and then you don't see the liquidity engineering flip, or failed liquidity engineering.
Okay.
But if you go to the lower time frame,
Okay.
you must see that liquidity engineering in that zone. So it must contain a liquidity engineering. It can be like this. Maybe the price created a flip like this. So this is the zone, and it contains a failed liquidity engineering like this. So inside this zone, it must have a liquidity engineering. You understand there?
Yes, sir.
So after, so these are the principles of the flip. Now, how to mark a strong zone? How to mark a zone? Now, many people mark the zone using maybe a wick. The last wick there, then they put the line or they put the box there, and they wait for the price to touch it multiple times. But that is not the way to mark a zone. There is a proper technical way to mark these zones. The only way you have to mark a zone is by using the last candle or the last buying candle before the sell movement, or the last selling candle before the buying movement. What do I mean by that? For example, this is the zone, you can see. Now, this is the resistance zone. In the resistance zone, we mark, we see this first touch here. We are going to look the buying candle, the last buying candle here before this sell movement is where we are going to place our zone, to mark our zone. It can be like this with the wicks in both sides. So you mark out the wick of the candle and the wick of the candle again. So this is the zone. This is the proper way to mark a zone. So the price can come like this, it can touch like this here, or it can touch like this here by just wick here. If the wick is just if the candle here broke by just the wick, that means that zone is not yet flipped. So this is
Yes, sir.
So this is the proper way to mark a strong zone, a zone. So I need you to understand this very, very clearly, because this is what we are going to use in the issue of camouflage and candlestick anatomy. So did you understand in this in this issue of flip zone?
Yes, sir.
So after we talked about this flip zone, now let's go and dive into today's program, which is candlestick anatomy and camouflage. So we are going to start with candlestick anatomy. Now, candlestick anatomy, when you say candlestick anatomy, we we are talking about the candlestick morphology, how candles are created. But in this section, we are just going to talk about the how to take entries using candlestick anatomy. And remember, before I told you that candlestick anatomy and camouflage are the entry type that we use to trade instead of failed liquidity engineering. So after teaching you candlestick anatomy and camouflage, you are no longer going to use failed liquidity engineering. Instead, you are going to use this candlestick anatomy and camouflage to trade. So what do we mean here?
Okay.
In the issue of candlestick anatomy, in the issue of candlestick anatomy, you may find sometimes in the market, you find a lot of buying candle, and then just one candle of one selling candle appears, and then again the buying candles. In this situation is what we call candlestick anatomy. When you find a lot of buying candle and just one candle of selling, and then a lot of buying candles, that candle formed there is what we call a candlestick anatomy. And it is the candle that we are going to use to find our entries. Do you understand here?
Okay. Yeah, yes, sir.
So whenever you find a candle like this, or it can be in the bearish movement, a lot of selling candle, and then just one buying candle, then a lot of selling candle again. So that candle formed there is what we are going to use to find our entries and stop loss. So in this case now, you can tell now you are able to see where to enter and where to exist, and where to press the stop loss. For example, now you find a lot of multiple touches, for example, and you find maybe there was a liquidity engineering here, and then the market closed above this zone here. So that failed liquidity engineering is where we are going to place our entry. But we don't know where to place our stop losses. Now, this candlestick anatomy is now going to tell you now, the first thing it's going to tell you is that this failed flip is the strong place to put entries. And then this candlestick anatomy is telling you that the only way to place entry is here, and the only place to place stop losses is here also. So this is the place where you have to consider to do your decisions. Now, there are characteristics of this candlestick anatomy. We have characteristics of this candlestick anatomy. Now, the first characteristics, let me Let me put them here. The first characteristics of candlestick anatomy, and these characteristics, we are going to use them even in the camouflage, because that's why I said I'm putting these two topics together because they share some characteristics. So the first characteristics, this candlestick anatomy must be in a strong zone. Meaning, whenever you find a zone where price rejected multiple times and then left you maybe a liquidity engineering and then the price flipped, this is the zone. Maybe you mark the zone like there. And then before the price breaked, there was a candlestick anatomy. Now, this candlestick anatomy must be inside the zone, and the second characteristics must be within the zone and before breakout, meaning before price breaks the zone, the candlestick anatomy must appear there. And the third is the higher time frame, the better. Meaning, whenever you see a candlestick anatomy in the higher time frame, it is very strong compared to the camouflage. I mean, the candlestick anatomy in the lower time frames. I'm not saying that you cannot take entries in the lower time frame. No, you can take if it matches these two characteristics. These two characteristics are the most efficient one, and these are the most important characteristics to see them in the zone and in this camouflage. I mean, these candlestick anatomies.
Okay.
So, how to mark them now? How to mark them? For example, sorry, my network is not so well today. I don't know why. So, for example, you have multiple buying candle like this. Multiple buying candles like this. And then just one candle opened. Let's give it another color. For example, let's put it black. For example, one candle just like this, and then you get another candles. Is here just for demonstration. So you can find wicks in this point here, for example, this here. For example, this can, yeah. Let's put this in. Let's put this in different color. So you find a situation like this, a lot of buying candles, and then just one selling candle here, and then we have another buying candles like this. How to mark down? that candlestick anatomy. In the issue of bullish like this, you mark that candle, the wick of that candle that made the difference, like this. And then in the invalidation point, you mark the longest wick. It can be this or this. So the longest wick that appears in the invalidation point, you mark it like this. Now, inside here is where you are going to find an entry point, and you find the stop loss. Do you understand here? Hello?
Yes, sir.
So this is
Yes,
how.
sir.
So this is how we mark that that camouflage. I mean candlestick anatomy. And in the issue of bearish, the same time, you mark the candle that make the difference, the wick of the candle, and then in the invalidation point, you mark the longest wick. For example, let's say this is the longest wick like this. So it means you are going to mark this as the invalidation point. So in the case where you find this is the longest wick, then you mark this as the invalidation. So inside here is where you're going to find an entry and a stop loss. And remember, we have learned the entry point using using formations. So inside here you can find a formation inside in the lower time frame. Now that formation is what we are going to use to enter and to put the stop loss. So this is the issue of candlestick anatomy. So the importance of using this is so clearly. First, it validates. It helps us to know that the flip liquidity engineering there is the strong. The strong. Then it helps us to know where to risk, how to risk, how much you can risk in this flip. So one thing now I want you to note now is this candlestick anatomy. This candlestick anatomy and camouflage are first reaction entry only. For example, you can find a strong zone like this, a strong zone like this. Now, that first touch, that first reaction is what you are going to trade. If the price turns back, you cannot trade this again. It means the price is going to seek for more liquidities down. So that is candlestick anatomy. Now, in the issue of camouflage now, in the issue of camouflage, the things are the same. The things are the same. I'm calling it CM. Now, the camouflage is, sometimes people call it wicks overlap. Wicks overlap. So let me write here. Sometimes people call it wicks overlap. meaning you can find, for example, let me use this same example here to demonstrate. When we are talking about wicks overlap, we are talking about where the candle, same candles, maybe it can be bullish candles like this, and then the wicks overlap like this. I hope you saw this. You saw this many times. Now, this is what we call a wicks overlap, where the same candles overlap the wicks like this. Now, the same principles used in the candlestick anatomy are what we are going to use again in the wicks overlap or camouflage, where we have a lot of buying candles and then we just have a wick overlap here. And that wick overlap must be in the strong zone as normal, and it must appear before breakout, and the higher time frame, the better. The same principles used in the candlestick anatomy are the same principles we are going to use in the camouflage. How to mark them? Simple. You use that wick of the first candle and the wick of the second candle like this. So inside here is what you are going to use to mark the entry point and the stop loss. Understand there?
Okay, sir.
So
Yes,
this is what we are going to use them to trade liquidity flip. Now from here now, you can be confident to trade liquidity flip, and you are going to be assured now where to enter and where to put our stop losses. And remember, you have to remember, both camouflage and candlestick anatomy are first reaction entries only. First reaction entries only. So that is candlestick anatomy and camouflage. Now this session is going to be over soon. I'm going to send another link so that we can do some examples, okay? I hope you understand there. Any questions so far? Hello?
no, sir. No, sir.
Any question?
No, sir.
Okay, I hope I'm very clear. I hope I'm very clear. So I'm going to send you another link so that we can do some examples, okay? So when I send the link, just join chat so that we can proceed.